Hello and welcome to the Morning Market Call. I'm Greg Lee. Joining me today is Bradley King, a junior studying finance in Marriott School of Management. Bradley, welcome to the show.
Thanks.
It's awesome having him here. Bradley's going to be discussing a little bit with us the weak dollar and what effects that has. So let's start off a little bit. Why do we have a weak dollar now?
Okay, well, we've actually had the dollar's decline this year by 7.6%. And that's been due to the massive stimulus package that the government has put out. So we put a lot of money into the economy.
Sure.
And that's declined the dollar, as well as the huge rise in the stocks around the world. So when the economy went through the crisis last year, a lot of investors went out of their foreign markets because there's huge amounts of risk there, and they went into T-bills, they bought lots of dollars, so the dollar went up. Now that the stocks around the world are increasing, Brazil's doing incredibly well, China, India, investors are moving out of T-bills, out of dollars, and going back into these markets. So we've seen the decline in the dollar.
So it's kind of a reverse from that flight to quality that we saw last year.
Exactly.
Okay. So what does this mean internationally, especially to some of our key trading partners like Brazil and Taiwan?
First of all, what it means is a lot of these countries are seeing asset bubbles.
Okay.
So you're having all these investors moving a lot of money in there, so you're having a lot of speculation in the Brazil stock market, Taiwan, China. So this is creating some asset bubbles in their stock markets as well as asset bubbles in the real estate as well. And then also what we're seeing is it's going to hurt their recovery.
Okay.
Because you're not going to have as many U.S. consumers buying foreign goods. So this year will be a little bit harder for you to buy your Ferrari, is what we're saying, because dollar's not worth as much.
That's okay. I can't afford it right now anyway. Now, you just pointed out that it'll hurt the recovery a little bit. Now, these governments are also doing some things to stymie the foreign investment in the Bolsa in Brazil, for example, in their local markets. Can you explain that a little bit?
Yes. So what we've been doing is there's so much money going into these markets.
Sure.
That the currency of these countries is going up. And so what Brazil and Taiwan, especially these two countries, have done is Brazil has actually put a 2% tax on foreign investors going into their markets. Taiwan has made it so they're doing capital controls and they're banning foreign funds going into time deposits there. So they just want U.S. investors, foreign investors, to not put as much money into their economies. So they want to control these asset bubbles going in there.
Now, we've talked a little bit now about what this means internationally. What does it mean domestically? What does the weak dollar do for the U.S. economy?
The weak dollar for the U.S., first of all, it's going to hurt our standard of living. Whereas all these other countries, their economies are booming, they're having a lot of investment there.
Right.
They can buy a lot easier, whereas us, it'll be a little bit harder. We can't buy as many of these goods foreign. So our standard of living will decline compared to these other countries. The other is that we're seeing our own asset bubbles. Gold is through the roof right now. Investors are also moving into oil. So we've had pretty big gains this year in gold and oil. But then we've also seen some good sides of this. Right now, this is going to really help our exports.
Sure.
Other countries, they have strong currencies, so it'll be a lot easier for them to buy here in the U.S. So it's going to help our recovery, actually. So even though we do have some downsides to it, a weak dollar will really help our recovery.
That's great. We've been talking a lot over the past couple of weeks about when will the recovery actually occur and what it's going to be looking like, WU, et cetera. So
yeah.
It's interesting that the weak dollar is actually going to be one of those things that's really going to help us out in our recovery.
Yeah, it will be.
Awesome. Well, Bradley, thank you so much for joining us on the show today.
Thank you very much.
And viewers, thank you so much for joining us also. We'll see you next time on the Morning Market Call.
The Morning Market Call is a production of the Marriott School of Business at Brigham Young University and is made possible by generous donations from Larry Pashjian and Gary Williams. This webcast was produced by Greg Lee, Tim Hart, Julie Kellett, and Jonathan Marucci.